Welcome to the Deep Dive, where we cut through the noise and get to the heart of the latest financial and tech news.
We'll connect the dots and make sense of it all.
So let's dive in head first and see what's making waves today. And by the way, this Deep Dive is brought to you by PantheonAI, your information co-pilot. And what's really cool is we're using our AI-generated podcast feature to bring you all these insights. Pretty neat, huh?
Yeah, AI is changing the game in so many ways.
Absolutely. Okay, first things first. The market. Seems like everyone's hitting the brakes today. S&P 500, Dow Jones, Nasdaq, Russell 2000 all down.
A sea of red indeed. These indices, as you probably know, are like a quick health check for the overall market, and right now, investors seem to be a bit hesitant.
The Nasdaq especially took a tumble. Why is that?
Well, the Nasdaq is like the tech hub of the stock market. Tons of growth potential there, but it also tends to be a bit more jumpy than the others. When things feel uncertain, investors often pull back from those riskier bets.
Uncertainty. Speaking of which, things are getting pretty heated in the political arena. Our friend House Speaker Johnson is struggling to get that new fiscal plan approved. Plans A and B both flopped. What's the roadblock?
The classic political tug-of-war. Fiscal conservatives are putting up a fight, worried about overspending and all this back and forth. It's making investors nervous. They don't like surprises when it comes to their money, right?
So we've got a shaky market and political drama brewing. What else is on our radar?
Well, oil prices are taking a dip. Looks like we're headed for another week of losses. Two big factors at play here. A strong U.S. dollar makes oil pricier for everyone else, and some worries about China. They're a massive oil consumer, so if their economy slows down, the whole world feels it.
Oil. It's more than just gas prices, isn't it? It's like a global economic pulse check.
Exactly. Keep a close eye on those oil prices. If they keep sliding, it could be a sign of bigger economic troubles ahead.
Okay, let's zoom in on the business world now. CCC Intelligent is making a bold move, dropping a cool $730 million to acquire EvolutionIQ. And get this, they're also planning a hefty stock buyback up to $300 million. What's the strategy there?
Interesting, right? Stock buybacks can be a sign of confidence. It's like the company is saying, hey, we think our stock is a steal right now, so we're buying it up ourselves.
They're putting their money where their mouth is, huh? Risky move, but I guess they're betting on themselves.
Absolutely. It's a calculated gamble. If their growth plans work out, that stock buyback could pay off big time.
Now let's step into the crypto corner. Seems like the U.S. Bitcoin reserve is gaining traction. Some folks are even calling it a strategic national asset. What are your thoughts?
The world of digital currencies, always a hot topic. Some see it as the future of finance, others are still on the fence. But the U.S. building up its Bitcoin reserves, that's a big deal. It adds a whole new layer to the debate.
Definitely a sign that crypto is moving into the mainstream, that's for sure. All right, switching gears again. Some news out of the Trump Media and Technology Group. Trump just moved his massive $4 billion stake into a revocable trust. And wouldn't you know it? The company's stock dipped 6% in pre-market trading.
Revocable trusts are pretty standard in estate planning, but the timing of this move, especially with someone like Trump, well, it probably rattled some investors.
So it's more about the optics than the actual financial details.
Yeah, probably. Whenever you have a, let's say, larger-than-life figure making big money moves, it tends to make people nervous. Uncertainty breeds volatility, as they say.
Okay, on to a topic that might hit closer to home for our listeners, especially with the year winding down. Tax-related selling. Stocks like Foot Locker, CVS Health, and Charles River Laboratories have taken a hit recently. Should people be worried?
No, not necessarily. Tax loss harvesting is a pretty common move this time of year. Investors sell off their losing stocks to offset any capital gains and lower their tax bill.
So it's not a sign of weakness in those companies, more like a temporary dip.
Right. Smart investors might even see it as a buying opportunity. Once that tax selling pressure eases, those stocks often bounce back.
Like a hidden discount for those in the know.
Okay,
let's zoom out and look at the big picture for a sec. Ed Cole from Mind Group is waving a red flag about inflation risks popping up in 2025. Should we be concerned?
inflation is a beast, that's for sure. It eats away at our savings and messes with our purchasing power. If Cole's predictions are on point, we need to start strategizing.
So what's the game plan? How can investors shield themselves from this potential inflation storm?
Diversification is key. Don't put all your eggs in one basket, right? Spread your investments across different types of assets, stocks, bonds, real estate, commodities that way. You're not overly exposed if one area takes a hit.
Makes sense. Don't rely on a single investment to carry the load.
Exactly. And it's worth looking into sectors that tend to perform well when inflation is on the rise. Energy and materials are usually good bets.
Okay, we've covered a ton of ground here. Market swings, political showdowns, corporate shakeups, and even some economic warning signs. Let's take a quick breather and then come back to unpack what all this means for you, our listeners.
Sounds good. We'll break it down into bite-sized pieces and make sure you walk away with some actionable insights. Welcome back to the deep dive. Don't forget, we're powered by PantheonAI, your information co-pilot, using the magic of AI to bring you these market insights.
We've been through a lot of information, haven't we? Markets, politics, the global economy can be a bit overwhelming, but hey, that's what we're here for, to help you make sense of it all.
Absolutely. So let's break it all down, see what we can learn and what it all means for you, the listener.
All right, first up, the market, specifically the Nasdaq's little stumble. What should investors take away from that?
Well, it's a good reminder that tech, even with its crazy growth potential, can be pretty sensitive to, shifts in mood. Diversification, that's the key takeaway here. Spread that risk around. Don't put all your eggs in one basket, as the saying goes.
Right, a balanced portfolio is like a shock absorber for those market bumps. Speaking of bumps, what about the political drama with House Speaker Johnson and that fiscal plan? How might that play out for investors?
Politics and the markets. Always a fun mix. The longer the stalemate drags on, the more nervous investors get. Could impact interest rates, tax policies, even government spending, all things that can ripple through the market.
So stay informed and buckle up, it sounds like.
Exactly. Knowledge is power, especially when things are this unpredictable.
Okay, on to oil. Still sliding downward, heading for another week of losses. What's the bigger picture here?
Oil, it's like a canary in the coal mine for the global economy. This downward trend, not a great sign. Strong U.S. dollar, worries about China's economy, those are the main drivers, could mean a broader economic slowdown is brewing.
So it's more than just what we pay at the pump. It's a sign of potential shifts in the whole economic engine.
Precisely. One thing impacts another and another and another. It's all connected.
All right, let's talk about CCC Intelligent for a minute. That big acquisition, the stock buyback. What message are they sending with those moves?
Well, when a company buys back its own stock, it usually means they think it's undervalued. They're betting on themselves, hoping to boost investor confidence and drive that price up.
But it's a risky bet, right? No guarantees.
Oh, absolutely. It's a gamble, for sure.
Mhm.
But CCC Intelligent seems to be feeling confident.
Now, on to the world of crypto. The U.S. Bitcoin Reserve is getting a lot of attention these days. What's your take on it?
It's a really interesting development. Shows how much more mainstream crypto is becoming. Whether it actually becomes a strategic national asset, well, that's still up for debate. But this move by the U.S. government, it definitely adds fuel to the fire.
Makes you wonder what the future holds for crypto, huh? Okay, let's revisit that news about Trump and that revocable trust. Why do you think investors reacted the way they did?
Well, revocable trusts are pretty common, but the timing of this, combined with, Trump being Trump, it probably just made some folks uneasy. Uncertainty can spook investors, that's for sure.
So the market reacts to more than just numbers, huh? It's about perceptions and personalities, too.
Oh, absolutely. Investor psychology is a huge factor in how the market moves.
Now let's get back to those potential buying opportunities we were talking about, the ones created by tax loss harvesting. Can you break that down for our listeners?
Sure, it's pretty straightforward. As we get closer to the end of the year, some investors sell off their losing stocks to offset any capital gains they might have. Helps them lower their tax bill.
So it's like a little year-end sale for those who know what to look for.
You could say that. If you do your research and find solid companies that have been hit by tax loss selling, you might be able to snag a good deal.
Nice. All right, let's talk about the elephant in the room, shall we? Inflation. Ed Cole's warning about potential risks in 2025. That's got everyone's attention. What can investors do now to protect themselves?
Well, as we've been saying, diversification is your best friend. A well-rounded portfolio can help soften the blow if inflation really takes off. And it's worth looking into assets that tend to do well during inflationary periods, like commodities, real estate, maybe even energy and materials.
So be smart, be adaptable, and don't panic.
Exactly. Stay informed, keep a long-term perspective, and you'll be in good shape.
Okay, earlier we touched on some of those cool tech trends, especially the ones popping up in the holiday gift-giving scene. What do those trends tell us about what consumers care about?
Things like repairable laptops and privacy-focused smartphones, it shows that people are becoming more aware of sustainability, data security. That's a positive shift. Consumers are demanding more from companies, holding them to a higher standard.
I like that. Consumers using their wallets to vote for a better world.
Exactly. And I think we'll see more of that in the future. Consumers are becoming more conscious, more vocal about their values.
Speaking of changing landscapes, we talked about the Synopsys-Ansys merger. It's facing some pushback from regulators in the UK. What's the significance of that?
Well, it's a good reminder that regulators are there for a reason. They're there to ensure fair competition, prevent monopolies, and ultimately protect consumers. This scrutiny of the merger is a good thing. It shows that they're paying attention, making sure the playing field is level.
Makes sense. The business world needs rules, needs checks and balances, just like any other system.
Absolutely. And those rules need to keep evolving as the global economy changes. It's a dynamic process.
Okay, we've covered a lot of ground today. Market trends, political battles, corporate moves, even a peek into emerging tech, and those all-important holiday gifts. Hopefully you're walking away with a better understanding of how all these pieces fit together and what they mean for you.
Remember, the more you know, the better equipped you are to make smart decisions. And that's what the deep dive is all about.
Before we wrap up, we want to leave you with something to think about. A little food for thought, if you will.
Bring it on. I'm ready for a brain teaser.
Okay, here it is. We've talked a lot about AI today, how it's impacting everything from finance to our personal lives. So the question is, as AI gets more powerful, how do we as individuals adapt and thrive in this new world? Do we embrace the possibilities, or do we run the risk of becoming, passive bystanders in a world run by algorithms?
Wow, that's a good one. It really challenges us to think about the role of AI in our lives and how we can shape its development in a way that benefits everyone.
It's about finding that balance, right? Embracing innovation, but also holding on to our values, making sure AI serves humanity, not the other way around.
Exactly. It's a conversation we need to keep having. And with that, I think we've reached the end of our deep dive. Thanks for joining us on this exploration of finance, technology, and the forces shaping our future.
And a big thank you to PantheonAI, your information co-pilot, using AI to bring you these insights, showing you just how powerful this technology can be.
Until next time, stay curious, stay informed, and stay engaged.
We've scaled the market peaks, navigated the political maze, and even glimpsed the tech on the horizon.
And through it all, one theme kept popping up, didn't it? AI. It's changing everything.
Right. We ended the last part with a big question. As AI gets more powerful, how do we adapt? Do we embrace the possibilities or risk becoming, just passengers in a world run by algorithms?
It's the million-dollar question, isn't it? AI could revolutionize so much. Healthcare, education, transportation, you name it. But like any powerful tool, it comes with risks.
We've already seen those risks playing out. Bias in algorithms, privacy concerns, even jobs being replaced. It's a bit unnerving.
Definitely. We need to be having these conversations, and they need to be honest. Ethical guidelines, transparency, putting human well-being first, those have to be the priorities as AI becomes more and more a part of our lives.
It's not about being afraid of AI. It's about using it responsibly, making sure it benefits everyone.
Exactly. We need to be proactive, educate ourselves, understand what AI can and can't do, and be a part of shaping how it develops.
Finding that balance, embracing innovation while protecting our values, making sure AI serves humanity, not the other way around.
That's the key. So what can our listeners do? How can they navigate this and actually use AI to their advantage?
So first things first, stay informed. Read up on AI, see how it's being used, talk about it. The more you know, the better prepared you'll be.
And don't be afraid to get your hands dirty. Try out those AI tools and platforms, see how they can make your life easier, boost your productivity, maybe even open up new opportunities.
It's all about being open to new things. But remembering AI is a tool. We decide how we use it, what values we build into it, what kind of future we create with it.
It's an incredible time to be alive, seeing this all unfold. If we stay curious, stay adaptable, and stay ethical, we can all be a part of making sure AI helps us reach new heights.
That's a great note to end on. Thank you for joining us on this deep dive into the world of finance, technology, and the forces shaping our future.
And a huge thank you to PantheonAI, your information co-pilot. We used AI to bring you these insights today, showing you just how powerful this technology can be.
Until next time, stay curious, stay informed, and stay engaged.